Let's get Siddarth Bhamre of Angel Broking also into the conversation now. Siddarth, good morning. Thanks for joining. Well, first up, what's the trade on the Nifty?
Good morning, Lata. We are not shorting this at this point of time, though, people are raising concerns about global cues and earnings may disappoint. But we are not seeing any signs from stronger hands that this market would correct significantly from current levels. So though we have missed out on going long in index, but we have been long in stocks. But at current levels of 8,600, I don't think so. Statistics are showing any signs where one should initiate short positions or square off their longs if they are riding. So still now we are not seeing we forming any index-based strategy. But yesterday's correction again in Bank Nifty, if that is the concern people would have, that correction is mainly because of long unwinding, and we haven't seen shorting taking place in Bank Nifty or any of the private sector names. So those people who are thinking of shorting this market, thinking that this is it now and probably some correction would come, I think they might be disappointed.
Okay, fair enough. Dipan, we have 5 Nifty companies announcing their numbers today. Apart from Infosys, from the others like Asian Paints, Ken, HDFC Bank, HUL, anything that you have positions in and you're expecting good set of numbers, John?
HDFC Bank, of course. I think hopefully they'll give the same kind of numbers that they have been generating. Of course, growth rates have come off from 25% to more like 15 to 17% or so, but even that on that base is quite commendable. So if they're able to maintain those growth rates, I think that will be fantastic. And what you're looking for, signs of improvement in credit offtake as far as HDFC Bank is concerned.
But the track record from the other private sector banks hasn't been so good. So what would you do with names like Federal Bank and DCB, etc.?
See, I think that again, you can't paint the entire private sector banks with the same brush. The stock we have invested in as a measure of disclosure. DCB, I think there were certain issues as far as higher provisioning on account of maybe one corporate account and some gold loan issues which they had. But the underlying growth momentum was quite satisfactory. And the other company, South Indian Bank and Federal, we don't track it, so wouldn't like to comment on it. But by and large, I think private sector banks remain the focus for a lot of investors, including us. And that's one sector or subsector within the banking industry where we are still getting the secular growth because they're obviously gaining market share at the expense of the public sector banks.
In our conversation at the break, you said that you don't find any Nifty stock that's going to give you phenomenal gains. At the moment, like the market, are you avoiding the Nifty and buying only mid-caps?
Yeah, absolutely. I think that, as long-term investors, we like to find stocks, where profitability, revenue doubles every 3-4 years or so. And that's looking very difficult for any of the large cap companies or in Nifty companies for that matter. And the choices therefore are in the mid-cap segment, where if you have good quality companies, decent corporate governance standards, good utilization of their capital employed, and if the growth momentum is there where they are growing by 15-20% top line, bottom line, then those are the stocks to focus on and try and increase exposure.
Why don't you name any of your recent find?
No, I would not want to go into that at this point of time. There are a lot of disclosure issues and compliance issues. But we all know the sectors which are doing well. They are pharma, banking, especially private sector banking, FMCG, consumer-oriented stocks, and to an extent mid-cap IT.
All right. Well, Siddarth has a couple of strategies as well. Siddarth, yesterday the banking space was under pressure. You've chosen to short SBI this morning?
Yeah, so we have been riding since last 3 to 4 weeks on PSU banks, but mid-cap PSU banks or large mid-cap kind of banks. Now, we are done with those positive trades. What we have observed in last couple of trading sessions is a lack in momentum in PSU names, especially large caps. We have seen yesterday huge shorting taking place in PNB, around 9% built up with fall in prices. SBI also corrected but didn't see much of formation of short positions. So we are anticipating that short-term traders like us would initiate shorts in large cap names like SBI, and counter may drift down. Having said that, we are not expecting very big downside or new lows to be formed. So we don't have very aggressive targets. What we are anticipating is somewhere around 254, and one can fix stop loss somewhere around 274 and go short in SBI.
Well, surprisingly, it was Federal Bank which triggered the fall in all those public sector banks. The fact that they had to write off some money on a company company suddenly woke the market up to the huge exposures PNB and other state-owned banks have on steel stocks. And ever since, we have been seeing this distaste for public sector banks and to some extent some of the bigger private sector banks as well. And the bank nifty has been the laggard in the basket. Prakash, any view at all? Will you buy any of the private banks in distress?
No, absolutely. I mean, I think private sector banks would give you ample opportunities before they take off finally once the overall underlying changes happen in the borrowing set of companies. And as I said, some of the neater, more cleaner banks that we like is Lakshmi Vilas. The other one that we continue to buy into is DCB, because this is a one-off very clearly. The kind of trend that they've shown in terms of the growth has been phenomenal. The segment they lend to is quite challenging and very rewarding in terms of margins also. So they've mastered the SME lending to quite an extent because of the kind of particular background community that they lend to more prominently. And I think except for this one-off thing, they would probably be able to clip much faster. Interestingly, banks, there are a lot of them which have been left behind, like Dhanlakshmi, and some of them are just completely lost out in the race. So that's why the premium difference, what you want to pay for some of the well-performing ones, will continuously go up.
All right, just a word on the markets. I didn't expect the pre-opening to start with such a big negative tick. So clearly it is the Sun effect. We'll just get you the Sun Pharma numbers, -10. It was not improbable that there will be a 10% downtick on Sun Pharma, and that's how it is starting. I don't know why Axis, all the private sector banks have also fallen. IndusInd, Axis, Kotak. But these are, of course, early morning rates. I wouldn't lay store by them. But you will have to take the Sun Pharma number very, very seriously. And that's perhaps pulled the index as a whole. Ultratech was anyway doing very well yesterday. So that's countervailing, but not a whole lot. I wanted to see Bharti as well, if there is any positive tick because of the announcement. Okay, it's a minor green at this point in time. The rupee is opened marginally negative. I wasn't prepared for that. I expected that the rupee would actually be stronger because both crude and gold have crashed. Import items for India, not crashed perhaps in crude, but certainly moved lower. NYMEX is below $50. And even Brent, which we should be more interested in, is moved closer to $56. Gold, of course, is at what some would call mouth-watering levels and some would call a level at which you will not want to buy because you're expecting more selling. But at the moment, the rupee is flat, really. 63.66 yesterday, 63.68 yesterday. Today, we shouldn't be reading a trend into this. Sun Pharma is the one that you should keep on your radar. But I think we will revisit these stocks a little bit after they settle down. Suffice it to say that there is an unexpected downtick in the markets. Siddarth, you want to comment on this? The Nifty's move is starting in the red, though I must warn you, these are pre-opening rates.
Yeah, actually I was planning to give Sun Pharma a sell, but then I heard you guys talking about it and how it can open 10% down, so there was no point giving trade over there. I think that is weighing on market, and what you mentioned about crude and gold, that would certainly, make sure that, the stronger hands who have been, buying this market since last 1 week or so, won't be in hurry to unwind their long positions. So I won't suggest, despite this downtick, to people to go and short this market.
All right. The pre-opening rates have now settled down about 0.2%. Prakash, thanks for joining us and giving us your views on individual stocks. As we await the Infosys numbers, the key stock to watch out for this morning clearly is Sun Pharma. Remember, Nomura just downgraded Sun Pharma this morning with a target price of 690, which is much below where the current market price is. And they've even cut their FY16 revenues by about 12%. They expect a potential derating on the Sun Pharma stock, as they say that now there are limited levers for growth after the company issued a profit warning for FY16. So that clearly is the stock of the day. Apart from that, a couple of other stocks that deserve mention. LIC Housing Finance reported a very good set of numbers. So that stock in pre-opening has moved up. As you can see, up about 1.5% over there. Another good set of numbers came in from Hindustan Zinc and from CCL Products. So those are a couple of other stocks that you could see, higher moves on. Hindustan Zinc up about 2%. But Dipan, yesterday in late trade, we saw Ultratech Cement do quite well after its profitability beat street estimates. Is there anything in the cement space that you like?
No, I think Ultratech has been performing well over, much better than its peer group, especially ACC Ambuja over the past 2-3 quarters or so. But by and large, I think it's an industry which is struggling with getting the volumes growing. And while there is still some amount of price discipline, margins are in a way protected. But we don't see this particular industry growing as well for this year at least.
Okay, Siddarth, let's go through your other strategies as well. You have a short on Hindustan Unilever. Despite the fact that the numbers come today, you don't want to wait for the numbers?
I'll take that risk. In fact, what I'm suggesting is that probably, because of numbers, stock might, show you a couple of percentage point higher. And so on rise, we are suggesting to short HUL 920 to 930 odd levels. What we have observed, Lata, that unlike before, where HUL used to give you one side move with not much of correction and not much of consolidation. Now we are seeing that corrections are happening in this stock quite frequently from this resistance zone of 920 to 940. And in last 1.5 to 2 weeks, we have seen huge formation of positions.
Okay.
So,
All right.
All right. 2890, I understand, is the number from Infosys. I would assume that is the dollar revenue growth.
No,
2897 net profit. Okay.
2897.
That's
lower than
below
estimated.
street expectations. I mean,
Yes.
it's not a little below. The street expectations stood at 3017, and coming in at 2890. This is
That's about a 6% fall that we've seen, 6.5% fall on the net profits on a quarter-on-quarter basis. So that will not go down well with the street at all. 3017 crores. That's the by the way, that is the standalone net profit. So we just need to alert our viewers about that. The standalone net profit has come in at 2897 crores. We'll wait by for the US GAAP numbers, the consolidated numbers. So for now, this is only the standalone net profit that we have on our screen. By the way, the consolidated numbers are also out. So we'll just wait by for more details on that. Anything that you've picked up, Rima?
Well, no, nothing as of now. So still awaiting the numbers. We'll focus more on the dollar revenue. We'll focus on the margins, and we'll focus on the guidance. So as of now, the numbers.
Okay, 3030 is the consolidated number, which is slightly higher than what the estimate was. So that is a degrowth of around 2% or so, but largely in line with what you were estimating, Rima.
Yes, on the bottom line, the company has met street expectations at 3030. It's a decline of 2.2% on a quarter-on-quarter basis, but in line with what we were anticipating. The total income is also coming. Yes. It's coming at 14,354. So that too has met our expectations. 14,354 implies a 7% growth on
a little better. You wouldn't. It wouldn't count as a little better.
It is better both on the top line as well as on the bottom line, but considering it's in rupee, we will not set too much store. But all we can say is that the rupee revenues and profits are looking good. The top line growth stands at 7% on a quarter-on-quarter basis, slightly better than the 5% that we were anticipating. And even on the bottom line, the loss is only 2% versus the decline is only 2% on a quarter-on-quarter basis versus our expectation of 2.5%. So the rupee numbers are looking fairly stable, and the street would be happy with that. The consolidated EBIT has come in 24%.
So that as well is in line with what you were estimating. So no problems there. It is a fall compared to last quarter, but this was something that was expected, right? Because of the wage hike and the visa cost. So 24% is in line with
squabble 9 basis points lower than
what you thought. No, I won't squabble over 9 basis points. Margins at 24% are largely in line with street expectations. They imply a 170 basis points decline on a quarter-on-quarter basis. This is on expected lines because of rupee as well as a wage hike. So don't get disheartened by the quarter-on-quarter decline. So net, the numbers that we have are looking fairly healthy. On the rupee revenue, it's a beat. On margins, it's in line, and even on profitability, it's coming in line with expectations. The big number is
the dollar
2256. So that is a 4.5% growth on the top line, and this is a big beat. So this is going to qualify as a very good set of earnings from Infosys.
No, it's better than TCS. TCS dollar revenue was 3.5%.
Yes. So $2,256 million from Infosys is a big beat, and you can expect the stock to do very well. I think even in pre-open, it's up now about 3.5%. This is at least the best that we've seen in terms of the top line growth over the last few quarters, maybe 4 or 5 quarters at least. So the top line growth is looking very strong, much better than the 3.5% that TCS clocked in. And remember, Infosys in the previous quarter had missed street expectations. They had reported a degrowth in the constant currency where no other IT company had done that. So when you come back the next quarter with this kind of performance, it will allay street concerns. And secondly, the asking rate in Q2, Q3 and Q4 for the company to meet its guidance will come down substantially. Maybe it would, the earlier asking rate was about 2.8 to 3.5%, but when you kickstart the year with 4.5%, the asking rate for the coming quarters come down, which means that the company, you will have the confidence that they will meet its FY16 guidance. So overall, good numbers.
Okay, actually, Nilesh Shah, the manager and CEO of Envision Capital, has joined us. Nilesh, you just reading out the numbers from the flashes. First thoughts on the dollar revenue?
No, I think these are exceptionally good numbers. I think after a very, very long time, Infosys is actually delivering ahead of expectations, ahead of what they had guided for the full year. So I think this, after a very, very long time, you're actually going to see Infosys perhaps for the full year delivering maybe at least industry par or industry beating performance. And I think this really bodes well for both the company as well as the stock.
So given that TCS had disappointed this time in terms of muted growth and Infosys has done better than expectations, do you think the valuation gap between TCS and Infosys will narrow further?
Well, I probably attach a very high probability to that. I think the process has perhaps started about a few quarters back when the new CEO had already unveiled his strategy in terms of taking Infosys and transforming Infosys. I think that process had already started a few quarters back, and it's very likely that once the thoughts are translating into actual numbers, the gap between Infosys and TCS is likely to get bridged in the coming quarters.
Okay. Well, Rima, is there any other detail that you have, or we just have Nilesh to react to the margins as well? That's coming at 24. Rima's estimate was 24.1, or rather her poll number. So we are just squabbling about 9 basis points. The margins fell. Expectedly, visa costs and hiring costs were there. Doesn't disappoint you?
No, I wouldn't, because this
170
is again,
basis down.
Yeah, because I think Infosys has been known to at least protect margins and ensure that it has stable margins. That number of 25% at the operating level has clearly been a pretty strong number, which it has been able to report even during the difficult and turbulent times. So I think is that the number below 25% is a bit disappointing, but I don't think it's something to really fret over. It's probably in the rest of the quarters they can bounce back and at least get back to that 25% number. But I think they are in a growth phase, they are investing, and so to that extent it's good enough to expect that the margins would be in this band.
And one word about the margins, the company's stated margin band in the near term is 24 to 26%. So now Q1 will be the weakest in terms of margins because of the wage hike and visa cost. And even then they've managed to be within that margin guided band. So, don't be too disappointed with the margin performance. It's purely on expected line. It's the top line you need to focus on.
Okay,
Right,
Deepan, sorry, 4.5% higher on Infosys, better than what the street expected. We should tell you again and again that the 2256 represents a 4.5% rise in dollar revenues, compares with the 3.5% rise.
Right, the
okay, there's the guidance.
Guidance has been retained at 10 to 12% in constant currency terms, so that is another positive. Retain the guidance. In case the viewers have joined in late, Infosys has reported a very good quarter, dollar revenue growth of 4.5% at about $2256 million, margins in line with expectations, and more importantly, FY16 revenue guidance has been retained at about 10 to 12%. Deepan, your thoughts?
Yeah, I think great set of numbers, and short-term strategies as far as the new management team is concerned seem to be paying off. And I think that the fact that they were looking at mining more of their customers for higher revenues, and they had done a lot of changes as far as the sales and marketing processes were concerned, and we have been reading about it. I think those seem to have made a difference in the short term, and this is clearly top of the line industry-wide performance for Infosys, and it's great news, I think, for Infosys shareholders.
You have to excuse me, it's 14.2 attrition rate. That's a major improvement. Oh yes, Nilesh, thumbs up. Tell me more.
No, I think this is again a fantastic parameter that they have been able to achieve. So an attrition level which was north of 20% a few quarters back is sub 15%, which I think I haven't seen this kind of a number in a very, very long time.
There are actually
and once
some
again
more
better
which are positive.
than TCS. TCS was 15.9.
The utilization rate has also also expanded considerably, including trainees. The utilization has gone to 75.7 versus 72.8, and excluding trainees, it's gone to 80.2 versus 78.6. Rima, your thoughts?
Well, utilization is good, but the volume, I know we're flooding the viewers with a lot of numbers, but volume growth has come in at 5.4%. This is the best that we've seen in the last many quarters, which is why the top line growth is looking so good. So volumes are looking good. Apart from that, even the client additions are looking healthy. So for instance, in the $300 million bracket, they have not added a single client in the last 3 quarters, but this time they've managed to add one. Even in the $200 million category, instead of having 4 clients earlier, they now have 6, and so even they've managed to move up their clients in the large bracket in $300 million as well as in $100 million, and this is an improvement compared to all internal.
Can you give us a little bit of perspective? When TCS numbers came, you told us that year after year the same quarter was showing a decline. Is this showing a U-turn?
Okay, so on a year-on-year basis, the company's top-line growth has been 5.8%, and this is an improvement compared to the 3.2% top-line growth that they had in the previous quarter. So on a year-on-year basis...
Excuse me, revenue guidance has been increased.
In dollar terms from to 7.2 to 9.2% in dollar terms. So that is very good. The dollar revenue guidance has actually been increased.
It was seen at 6.2 to 8.2, right? And now it's become 7.2 to 9.2. So 1 percentage point rise
that will be taken very, very well by the street, increasing your dollar revenue guidance at a time when your peer like TCS is actually showing muted growth performance. So that will be taken very well. Also, I just want to point out the geographic volume breakup is very good this quarter. North America has grown by 5.1% sequentially. Europe has grown by 1.2%. Remember, all of these segments had declined last quarter, and rest of the world has grown by 9.7%. And that is the reason Infosys is up 6.5% and now 7% this morning after increasing their FY16 dollar revenue guidance. Very good growth in this quarter's dollar revenue, about 4.5%, much better than peer TCS. And as you can see, the stock is spiking up. Nilesh, wanted to get your thoughts on this. From here on, what kind of move would you expect on Infosys versus its peers?
Well, I believe this has essentially been a breakout quarter. I think the several years of underperformance which Infosys has gone through, both with the market as well as with the sector index, I think that's something which is now about to change. Clearly believe that this quarter performance has been is going to be a big catalyst for that change. So it's not just about the company transforming, but I think it's also about the stock setting into a period of very extended outperformance, which I see for Infosys.
Actually, it's a reiteration that Indian IT companies are probably able to take the challenges that are facing the sector. I just have to tell you that the markets have opened in the green. The pre-market didn't give us that indication, but Infosys has clearly turned the sentiment. It's 8% higher, now 7.5%, but touched 8.5% higher as well. So 1,000 was crossed with absolutely not even a thought. As well, HCL Tech, I think shining in its shadows, is up 2%, and Bharti Airtel, for its own reasons, 1.5% higher, because it's getting rid of, probably showing intent of getting rid of some parts of the African business. And now for the bad news, Sun Pharma is almost down 15%, 14.5% as I speak with you. Anuj had warned us that a 10% fall would mean a 29-point hit.
Yes.
So this is a 15% fall. One would expect the 45-point hit has come only because of Sun, or maybe 40-point hit. But that is being easily countered by the joint efforts of the IT companies and Bharti. In fact, Wipro has also moved up 1.2. So the entire IT pack is gaining in strength because of the extraordinary performance or unexpectedly good performance coming in from Infosys. Let's get Sandeep Agarwal, the VP Wholesale Capital Markets in Edelweiss, also into the conversation. Sandeep, you watched it from a distance without getting into the conversation. Your thoughts on Infosys?